Why is a bank's liquidity important?
If a large number of depositors and investors try to withdraw their money unexpectedly, a bank can run short of cash. In normal times, withdrawals from a bank are fairly practicable. A small bank holds enough cash and liquid assets to pay out fully its depositors on demand.
Why is a bank's capital important?
An unexpected slowdown in the economy can mean some borrowers get behind on their repayments and some loans may not get paid at all. A bank can make financial losses if some of its risky loans are not repaid. This shows up on its balance sheet as a fall in the value of its assets. A bank's capital acts as a shock absorber to pay for the unexpected losses it makes on its risky loans. Its balance sheet shows a fall in capital equal to the value of its losses.
How did the crisis change financial regulation in the UK?
It's widely acknowledged there were failings of regulation during the financial crisis. During the crisis, the UK authorities and other globally lacked the tools to deal effectively with a failing bank, and no one was responsible for regulation of the UK financial system as a whole. The weaknesses of regulation in the UK were addressed in new legislations to keep the financial system safe and sound. These changes built on public consultations. Other countries made their similar changes. In 2009, the Bank of England was given a statutory objective to safeguard the financial system. A special resolution unit was created at the Bank of England to manage the failure of troubled banks to protect other parts of the financial system. A package of major reforms in 2013 created an independent financial policy committee at the Bank of England and two new financial regulations, the Prudential Regulation Authority and the FCA. The FPC was established to keep risks in check across the financial system as a whole. If the FPC sees evidence of financial system growing too quickly, it can apply the brakes to keep credit in check and stop debts rising unsustainably. Just as important, the FPC can release the brakes to support the economy if credit growth has stalled. The FPA is the part of the Bank of England. Is reasonable for the safety and soundness of around 1,700 banks, building societies, credit unions, insurers, and major investment firms.
What is the financial system?
The financial system is central to the working of the economy and modern life. The financial system has many parts that allow money to flow around the economy. Best known are high street banks, building societies, and insurers. Others include pension funds, asset managers, investment banks, credit unions, and huge funds. All of this and more make up what we call the financial system. A healthy and stable financial system provides three key services to the economy. It makes payments from one person or business to another. It supplies finance to business and households, and it allows us to insure against risk. Each day, the financial system sees millions of transactions, including spending in the shops and online payment of bills, wages, benefits, and withdrawals from high street cash machines.